Hello everyone, Piotr speaking. This is weekly forex analysis. Always start as usual with Euro USD. Monthly candle, a monthly chart. As you can see, it looks like it's developing this right arm of this butterfly pattern. Yes? So the target price is around this area. This is the measurement typical for the butterfly pattern. Yes? So the market can reach that level. So this is around 140, 46, 62, and most probably we will see some reactions at this level on 38.88. So around this resistance line, because this is a resistance line, so the market has first break through this resistance line. Good. The weekly candle, we've got a strong weekly candle, a green one. I was talking about it last week, so we can consider it as a continuation pattern already. Okay, so this could be called a rising free method. Although those three corrective candles, they should go a little bit deeper into this green one, but still I will still consider it as a continuation pattern, and I think the market will go to the upside. Always willing to go to the upside. There are a few other systems which have shown it or are showing that. This is this FIBO 100 blue one. Those blue lines, I always mark with those blue FIBOs all the trend following trades or trades during the London session. And this trend following, you can see this is the break through this FIBO 100, and this is a kind of trade setup which requires a stop loss below that low. Okay, so in this case more than 300 pips. So it's a rather more expensive one, especially on the weekly chart. I do not plot it on the lower charts than 4 hours. Okay, I plot it sometimes on the 30 or 15 or 1 hour chart, but then it's only during the London session, and this is something a little bit different. But in this case you can see the market didn't want it to move below this FIBO 100. Okay, and based on that system, you could be in a big profits. Yeah? It's not like I plot this system. I trade not that frequent with this system anymore. I used to trade with it a lot. It's because I send signal based on Elliott counts nowadays, and it's more Elliott counts give me or give everyone a great opportunity to enter with very precise and exact price range. Okay, or very narrow SL stop loss. Yeah, so that is a little bit different. But in such cases, when you can swallow such a long stop loss, you can see that usually, and in most cases, this will go very nice to the direction you are predicting, and this is also based on Elliott, because I was talking about it. This is the first leg, this is the second leg, and this is most probably the third one. Okay, there's another count also possible, in my opinion. This could be an A, B, and C to the upside, and the C may end up somewhere here. So there might be some reactions to that as well. Okay, so I think I will prepare myself and other users or my subscribers for the situation as well, because in that case we could have here an X wave. This could be an X wave, an ABC, X, ABC. Of course, this ABC, the C should be a bit longer, and will reach most probably, so should have the length of this A, at least A. Should have. It doesn't have to. It has to. The C can be shorter as well. So this is also possible. Yeah, it's hard to say. The only issue I'm having is that this MACD is not going up that strong like the chart itself. Okay, and the price itself. it has almost reached that top, so this will react to that top definitely. This is one thing. Another thing I would like to show you, this is a trend following, started in January, okay, and I had a position based on that previously, okay, and I was even in minus 200 pips, and the stop loss was over 500 pips in this case, okay, and then the market went to the upside quite strongly, okay, moved to the downside, but wasn't able to break, to trigger this stop loss all the time long, okay. Okay, and of course it took almost a year to develop it. So this is not what you can take, or we would be willing to take. Yeah, most probably, and actually you should take the profits and get out of this position if you are in 200 pips or 300 pips in plus, or even 100. So this is also reasonable profit. But anyway. So yeah, that was a short comment regarding this trend following. And based on this situation, yeah, the market can even open with a gap to the upside. Yeah, so this is the market can really react quite strongly to the upside. Although on the RSI we are having okay, the market had a few tops here, actually two tops here at the same level, and now the third move to the upside isn't that strong like those previous one. Okay, and so that could be a sign that there might be something going on. Okay, and if you check the 4 hours chart, and I was still considering this correction here as an ABC correction, and the market is actually somewhere around that level here. Okay, so this is a typical 138.2 for a B correction regarding this A, this long A. This could be still a B. This could be one A B C, small A B C, small B, and the last small C that it will give you the bigger B in this area. So I wouldn't be surprised if the market will make a reversal here, and then go to the downside. Yeah, based on that what I said, and also based on that top here, because the market may react to that top as well. Okay, but this is a kind of alternative scenario, and you never know what the market will do. Yeah, the market reversed here very strongly. This is what the market the market sometimes do not reaches lower levels just to give you the opportunity to enter with a better price. This is not always the case. Just consider one of my signals. There was a signal, this one, that was sent on the 10th of October. Yeah, so at the beginning of this month. I made only 44 pips on that trade, but that trade was one of those entries. You will say, okay, that could have given you a lot of profits, okay, because the stop loss wasn't triggered in this position, so that was the stop loss. Okay, 61, the market went on to 71, and then went to the upside very strongly. Yeah, sometimes you will miss even such a good trade, unfortunately. Anyway, so that was the Euro USD. Let's go to the Euro Japanese yen. Euro Japanese yen on the monthly candle. The monthly candle, yeah, there could be some kind of reaction to those levels. Again, yeah, so this is the market is the RSI is already over the 70 level, and so the bulls are the strongest, but they are losing their power. Yeah, so that is what is how we should understand this indicator. Good. Weekly, there is a green candle. I had once already talked about it. Okay, this is this black line, horizontal line. This is where the fifth wave could have ended, and you can see the market reacted very precisely to that. But after that, I've started to count those waves here again and again, and I came to the conclusion that the market may make another top because of that it's not falling to the downside yet. Okay, so in this case we would have a higher top here and a lower high on the MEC indicator, and this will give us a nice divergence, and this will be an indication for the change on the market. So this is one thing. The question is now whether the market is willing to break through that line, through these levels here. So that is the question. I think it should because of this monthly candle. So this is another thing, and because of the situation on the Great Britain pound Japanese yen. Okay, but having said that, and considering this is a support line on the daily chart, this is quite important, because if the market breaks this support line, there will be this will be a sign for a short trades, although this will be a trade setup for a short trades. This is one thing. Another thing is I was showing and commenting this upward movement 1 2 3 4 5, and I've sent you a signal based on that count. I sent you a signal for a Great Britain pound Japanese yen. I've also in this signal I said, okay, there is an alternative possible entry with this price, okay, 134.04, and if you check it on the chart, it's very precise entry. This is very exact entry. This is based on Elliott, as I said, what I said at the beginning of this video. So Elliott can give you this great opportunity to enter with a very exact price. This is one thing, and yeah, you can have it. You can check it on on my profile on Google Plus. I comment and I prepare subscribers for the coming changes. So you can go here and have a look on all my comments, and there should be, yeah, this is, I think this is, okay, yeah, this is my comment, okay, this is the comment that was on the 17th, so this was on Thursday, I guess, yeah, that was Thursday, and I said this upward movement may be finished, and I usually give you a chart, so you can have it on the chart, and so you can prepare yourself for this move. And this developed as I said, and the market went to the downside. Yeah, so I had already some profits based on that. Yeah, that there were at least 19 pips as profit. You could have more. Okay, I've already moved. Unfortunately, I've moved my entry to the break-even point, and yesterday because I had an entry of 134.02, and I was thrown out from the market, unfortunately. And this happens sometimes, and there were some users who asked me whether they should keep, whether you can keep position during the weekend or not. Okay, this is there isn't any good answer for that. You can, a good position should develop, and a good position should give you profits. Okay, if you have a bad position, a false position, or you enter with a bad price, yeah, most probably you won't be successful. But what I want to say is, okay, you can try to, because I usually try to move my entries to the break-even point, just in order to have a better control on such positions. But sometimes that can happen as well. Yeah, so other position has been closed. Okay, I may try, if the market open somewhere here, so without breaking through that top. Okay, I will consider another short position. Okay, I'm not sure whether I will send you this position, but I may enter into the same signal, into the same trade setup, if the market gives me the opportunity to do so in the tomorrow in the evening. Okay, so this is what could happen. But coming back to this analysis, the market did a 5-wave upward movement. So this is an impulse. We call it an impulse based on Elliott, and now we could expect an ABC correction, a 3 waves movement as a correction. Okay, and if the correction will end somewhere here, and the correction will look like a typical correction for a correction, because this is also important. You cannot have any correction. You should have a certain kind of correction, and this could be because we can then call it, and we should call it as a first move to the upside. And this first move based this is a five wave impulse. Okay, so there's a first move, and there could be a second move, and this second move should be a zigzag. Okay, if this will be the case, then I will consider it as a 1 and 2, and then most probably a 3 to the upside. Okay, but having said that, and considering the daily chart, this is not that easy, especially because of this situation, whether this is already ended or not. Yes, this is the difficult part. The more difficult part. It looks like it's not ended yet, but on the other hand, you can see this is reacting to that. But yeah, the market could have ended this upward movement here as well, and will go to the downside here. This is also possible, yeah. And then we will call it, because we have 5 waves to the upside, and we can this could be the last 5 to the upside. And in such case we will call it sorry, this is called truncation. Yeah, this is called truncation. So that the market is not able to break through this top. Yeah, and yeah, that is the question, whether this is a 3 or this is a 1 again. Yeah, but that could be yeah, the 3. Yeah, that could be the 3, because that is 1, 2. This is a 1, 2, 3, 4, and 5. Yeah, it's not that easy to. I don't have it. There are too many possible counts. Unfortunately, there's a count 1, 2. This could be a 3 for me. That, yeah, 3 here, and 4 and 5, and this could be a 3 or 3. Yeah. Okay, 1, 2, and 3, and 3 is more complicated. Anyway, I don't want to make it too complicated. Yeah, let's leave it like that. Yeah. So there are chances for the market to go to the upside, and the market may reverse. Yeah, based on this situation here, whether this correction, whether this will be a typical correction for the second wave, and if this will be the case, I will go to the upside. We've got this MECD going through the 0 line and having those tops above the 0 line, so this is a positive sign, and we are over the 0 line on the higher time frames as well. And as I mentioned at the beginning, we may have a new top and a divergence on a weekly chart. So there is still time to develop. So the market have to mature. Okay, so that's what how I can analyze it, and I can cover it and describe it. Okay, good. So I'll leave it like that. More explanation this time to that. So I will make this one a bit easier, shorter. Good. Again, monthly candle. This is a strong one, because this is the current one, of course, and the previous one. The previous one is green. The previous one is strong. That gives you the tone for the whole month, actually. Weekly, this is green. I was already talking about it in my last week analysis. A new top. I'm looking for the same situation, because this is also yen, and this is also Japanese yen in this pair. So that should react similarly. Okay, support line. Some counts of based on the daily chart. Looks like this is a 3. This was a 4. The market went to the upside and again made this first move to the upside. And again, I was talking about it, and I sent you a short signal for this situation as well. And the short signal was sent on the 16th. And actually, when we were here, we were already able to make this move. I sent in this message, in my message that I sent, there is an opportunity to enter with a higher price as well. Alternative price, because sometimes I send or write about ranges where the market can react. Okay, the market reacted at 158.25. the upper boundary was 41, and I entered with 41 with a second position or with other positions. Okay, and now you can see the market is reacting to the downside. So let's hope the market will go to the downside and will make a correction again, a similar correction like I was talking about Euro Japanese yen. So we need a correction just in order to gain strength to the next leg, to the upside. And yeah, having said that, and having this weekly green, we should have a nice trade set up to the upside. Okay, so this is what we can expect. I may send you another short position just in order to get this downward movement as well. And then when the market starts reacting, typically for a reverse, for a correction and making some reversal signals, I may send you a long trade the coming week. Good. USD Japanese yen. There is nothing much to say about this one as well, because this is this triangle, and the market is in this triangle, and actually those lines are getting closer and closer, and so the range become smaller. So you have to be careful about it. Yeah. So this is how the market can react. This could be 1, 2, and A, B, C. Okay, there will be a D. Okay, and then an E, and then a break through that. Okay, so I leave it like that because this USD Japanese yen, this is sometimes the weekly candle. This is a red one, below Bollinger Middle Band. So this is also important. Yeah, but anyway, I was thinking about considering another leg to the upside. This is one thing. Another thing I was talking about is a big A, a big B, and a big C. Yeah, somewhere here, big C. This is the length of C. So that's why I'm having so many Fibos and so many lines on the chart. But this is actually what I need. I need it all the time, just in order to come back to all my thoughts I had previously. Anyway. Okay, that looks like a triangle, but it doesn't have to be a triangle. Yeah? One have to really count all those movements inside what I haven't done, and most probably I won't do it because sometimes I just leave it and I do not count. If it's too complicated, I try to be a bit smarter and not to put myself into a situation or my subscribers into a situation where I may have a right count, but it will take too long or take too much energy and all, and at the end of the day you will miss some of the trades like that one. Okay, I've shown this level, and okay, so this is 300 pips to the upside. Unfortunately that was missed because we had an entry position below that. And for those who check my analysis regularly, you know that I was talking about this upward movement. I was looking for that upward movement, but the market was a little bit choppy in this area, so that wasn't that clear and that precise. So that's why I was having that entry, of course, that entry as a possible entry. Yeah, but there was also another long, that one. Okay, unfortunately that was really very nice one, because keeping that position you could have this nice movement as well. But yeah, anyway, good. Monthly, this is the reaction to the monthly resistance lines. Weekly, now we've got a long green candle. This has stopped at that level. This is also typical level for the second wave correction. Okay, I said, I think last time also in this video, 1, 2, 3. This is a 4 most probably, so there should be another 5 to the downside. Yeah, if this downward movement should be finished. Yeah, so there should be another leg to the downside. Anyway. Okay, I stopped around that, typically very precisely on that level. So, but I've got a green candle, and this was a support line already broken. I talked about it last week. There will be opportunity to enter with a better price. So there might be some chances to enter now with a better price. Okay, so if this is a 1 and there is, in this case, there should be the 2, the second wave. This is a strong wave. This is the other point here. This is very strong actually. This upward movement. But anyway, the market reacted on this 4 hours chart again on the typical level for. I mean, it's not that typical, but this is one of the possibilities. More typical should be between